Hey guys, how are you? Hope you're enjoying your Thursday today, May the 7th. No trade for me today in the live account, just kind of watching, taking a look at what's going on, and internalizing market information. Very, very interesting trading activity going on. So we'll just go over some of that real quick. So take a look at the financial sector. Beautiful bull trend day. Take a look at the Qs. Very choppy, almost a bear trend day until now. So I see a little bit of sector rotation. That's what they call it anyways. So we're definitely seeing money flowing out of the tech sector into the financial sector. Financial sector was very bearish the last couple days. Today it's very bullish in somewhat of a bull trend day. Now they seem to be moving up at the same time for the first time in the whole trading session. So I guess part of the reason why I didn't really trade the spiders this morning was because there was a lack of clarity. Really, I almost made a play off this support right here in the morning around 10 o'clock because we were in somewhat of a 5-minute uptrend going into that. This was somewhat of the intro that we had here. And we had this sort of ascending pattern here. And then we had this huge pop. And then I was looking when we were pulling back here, I was anticipating some form of higher low. When we started to just crack these lows, I realized that it was over. So I said, okay, I was willing to take a long trade at this point, and I was going to basically use this level as a reference point. And I'll tell you why that level. Because if you look at the chart previously, you can see how we were building somewhat of a base of a support. Tried once, twice, and then we broke the support and regained it. So I'm always looking for these kinds of levels where we have a support level, broke it, and got no follow through. That generally gives me a good reference point for where to kind of hide your stops in some cases, right? I didn't take that trade, but I was actually about to. And basically, it ticked down there so fast that I guess I just wasn't able to grab it. It was 287.22 was the tick. And if you look at the SPY pre-market, the level would have been 16. And we came within about 5 pennies of that. Anyhow, so basically we came right down to this support level. And we stayed within the trading range, which is what I thought was, in fact, the most likely scenario. But didn't take that trade, and it would have worked out nice, kind of like a similar setup to yesterday, in fact, where I was kind of picking the low off of that level. And again, I was watching and I had the level there set and everything, but I just felt like because we were so close to that level, the risk was high that it would get taken out, but obviously it didn't get taken out because of how drastic the move was. We had another nice pullback here, and during this sort of pullback, I actually scalped the NASDAQ on a paper trade. So let's take a look at that real quick. We're kind of in a downtrend, you can see, and we came up to this resistance, tested it twice, and on the break of this sort of level, and I believe it was 221 and then 220.90, I was seeing some aggressive selling at that point. So you know what, I said I was going to scalp this NASDAQ here, and I managed to scalp it short real quick for a nice move and then covered really quickly. So that's the definition of a scalp right there. The same thing right here on the NASDAQ where we had pushed higher. This was an example of a good long setup where you see a sort of push, a retrace, and a huge push lower and a huge rejection. That generally sets up a good long trade probability wise. We saw higher prices from there until we moved up to this sort of pivot, which was our last 5-minute lower high. And I was interested in looking at that because one thing I've noticed about the way the markets move, especially going into around lunchtime, 11, 12, 1 o'clock, is that they adopt the stop hunter mentality where the market is kind of just going to chop around slowly, take out some stops here, chop around more, take out more stops there. So it makes sense that we were going to see somewhat of a pop in this direction to take out any kind of stops that were above this 5-minute lower high. I decided to take a scalp there and kind of front running that trade, and I was just kind of scalping the NASDAQ here on this TradingView platform, paper trading, just to play around with it, and I managed to exit with some profits there. So again, it's the stop hunter mentality. It's an interesting way to think about the markets, right? So instead of trying to predict whether it's going up or down, you got to think, okay, where are these newer traders likely placing their stops, and where are they going to be under pressure? And I think that that's what these institutions are thinking about sometimes as well. Again, there's very advanced market making algorithms that can pick up this stuff probably much quicker than we can. But I mean, you can kind of identify this stuff on a chart. No trade really on the spiders for me because as you can see, we're in a very boring trading range. Now we're moving to the top part of the trading range here. So if we see an upside break, I think we can see more upside in this market because of the extreme amount of bearish overhaul that we've been seeing. And there still is a lot of bears in this market, obviously. And look, I mean, if you look at this hourly chart, you can definitely see there's definitely some traders with stops above these highs. Like, there's no doubt about that. So if we push above this right now, you know, decent setup for the long. So I don't know what I'm going to do. I'm pretty bored of looking at the screen right now. So I think I'm just going to chill, maybe go outside, take some fresh air. I thought this would be a good time to teach you guys about the option chain real quick. I wanted to show you something. So when I look at the option chain, I do not look at option prices in price terms, although you can see that if you just hover over it with the strategy builder not selected, and you can see that the prices is right there next to it. Now, I prefer to view option prices in volatility, and I'll tell you why. Because when you view an option price in volatility, it gives you a better picture about what the price of that option is implying as a move in the underlying stock, okay? So if you look at these puts here, you can see that these puts, this 282 put, is implying a 2% move in the spiders from where we currently are. So you as a trader can make the decision whether you agree with that or not. So this assumption is based on volatility. It's based on what the VIX is implying. So right now, this 282 is priced at a volatility of about 2.01 to 2.03%, which means that the price of this option is implying that kind of move in the underlying. All right. So let me tell you why this is important, because you definitely need to be aware of this thing when you're trading options, right? Because if you're just going to start buying a bunch of options and these options are implying a big move and the market is not actually likely to see a big move, then you're overpaying for that option. And that's why it's generally important to understand these things. So look, if I create a spread right here, sometimes these volatility percentiles can change around. So sometimes you might see a specific option that has a higher volatility than another one, potentially because it's being more actively traded. It might have a higher demand. You might see some wise guy action on a specific type of option. You never know. So the volatility can change. So that's why I think it's important. So if you create a spread, for example, I like to sell credit spreads on the put and call side. Now with this spread here, you know that you're selling an option with the implied volatility of 1.75% and you're buying the option of 1.87%, okay? So what you're doing is you're actually controlling the volatility that exists between these two options. Now that might sound a bit complex at first. If you're creating a spread, try to not buy an option that has a drastically higher implied volatility than the one you're selling. So you want to have, it needs to be proportionate basically. So that's why you need to kind of be aware of that. And that's why there's a volatility skew here. Spiders are moving way high right now. This is pretty crazy. Look at this. I didn't trade it, but I knew it was likely. All right, guys. So when you're looking at options, try and keep your view in volatility and not just looking at the price of these options here. All right, guys. So I'm going to end the video for there today, and I will catch you in the next video. All the best. Take care.